In this video, I'm going to go over how compounding grows your small trading account over time. One of the things I repeat a lot to new traders is that you should take a long-term view when trading. Work on your knowledge and build your discipline. I also go over how important it is to only risk small amounts. Too many people come to trading thinking they can risk huge amounts and make huge amounts. What actually happens is they get wiped out. You should only be risking 1% of your capital per trade, 2% maximum. So let's have a look at how a small account builds over time with consistent trading. We call this compounding. We are going to start with a £2,500 account. Our aim is to make 8% per month on average. Some months may be above and some below, but this is the average. We will also calculate this monthly. So at the end of each month, we up our 1% risk to match our new account value. So let's look at how your account grows over time. We will say we trade 10 months of the year, which allows us to take into account holidays. In year 1, we can see that we start off with £2,500, and by month 10 we are up to £4,997.53. Now most beginners think, that's not enough, I can't live off of that. But we have grown our account almost 100%. That is a fantastic result. Now let's keep going, remaining strict and sticking to our plan of small risk, steady gain. In year 2, we can see our account steadily grows, and by month 10, we are at £10,789.30. Again, we have increased by over 100%. However, with compounding, this means in 2 years we have taken our £2,500 account and increased it over 300%. In year 3 we can see more of the same. We start off with £10,789.30 and by month 10 we are up to £23,293.30. Into year 4, by month 10 our account is now £50,288.49. That's a 1900% increase from our starting capital in only 4 years. Show me any other investment that can do that. Now, you may not average 8% per month as a beginner. You may average less. However, the point remains the same. You can build a small account if you only focus on your trading and your discipline rather than the money. 4 years is not a long time. It is the same amount of time as a university degree. It is the same amount of time as most apprenticeships. The 4 years will pass anyway. By working on building slowly and properly, you will be in a much better position than if you take wild risks, believe the get-rich-quick group of traders out there, and lose your capital. No capital means no more trading. Don't be one of the 90% of retail traders feeding the market. This is exactly the sort of thing they see and then ignore. Trading is a difficult industry. The high failure rate should tell you that. It is not possible to learn trading in a couple of weeks or a couple of months. You need to think long term before you're going to become consistent. Not a lot of people tell you that, but it's the truth. If you can't learn to play a guitar in a couple of weeks, if you can't learn to speak a foreign language fluently in a couple of months, if you wouldn't be able to pass your 4th year university exam after only sitting first year, then you can't learn to master such a competitive and difficult industry as trading that quickly. Give yourself the best chance possible and look after your capital. Make small incremental improvements each day. Okay, as always, please do subscribe to Decisive Trading if you are learning how to trade. I'm James Orr and thank you.